I'm sick of my needs. Yeah. Um. Hello. What's going on, everybody? What's going on, everybody? So today, we're going through a simplest thing. Okay, we're going through gold. We're going through silver. We're going through copper again. I did a live stream yesterday, but I took the live stream down personally because it was just kind of bugging, man. It was like I think it was because I had so much shit open, like I had so much tabs open on my laptop, so just kind of like it kind of caused my laptop to kind of like be kind of stiff, I would say. But okay, we're going through gold, we're going through silver and copper, just generally the commodity market. So what I'm actually looking for in the commodity market is I'm actually just like kind of following closely the dollar, and on a live stream I actually did like tell you, or I actually did tell people about the correlation between the two, between gold and the dollar, or between gold or between commodities and the dollar. So I'm gonna share my screen and actually show you. We're gonna actually just kind of like do a top-down analysis, starting with currencies and then going down to commodities. But yeah, let's just see where is the gold heading. So here we have the dollar, and I did an analysis yesterday breaking down the dollar, how it actually respected the trend line, and how of a beautiful trend this is going up. So we're actually seeing dollar that's actually it being strong. I mean, we actually see dollar that's actually being strong. So, um, yesterday I think was on Tuesday or on Monday, but recently I think inflation rates in the UK was actually released and it came out positive. I think it came out at 2.3%. Um, and I think investors are actually seeing that, and um, they're actually having a bit of a okay. Here we go. So right here we have gold that's actually been that actually was about. I mean, we actually see inflation rates year on year on the UK increase about 22.3%. And I think this can actually be an indication to investors that the upcoming Fed interest rate decision might be actually hiked, purely for purely for purely for the fact that they're actually seeing that inflation is high in other countries or other parts of the world, and we might actually try to actually you know um, catch it or try to actually maintain it at an early stage. So that's what I'm actually seeing now. So hold on. Where's the damn? Okay, cool. United States. As again, all right, cool. Right. So this is what I'm actually gonna do. So I'm actually gonna break down the dollar. We actually see the dollar's actually just kind of like having a beautiful uptrend. Hold on, having a beautiful uptrend, and this is a beautiful channel actually going up, and this is an indication of every dollar-based currency pair, the USD JPY, USD CAD, every dollar-based currency pair. I think this is actually a good indication that the dollar might actually be positive. And what we're actually seeing on the contrary to that is the gold. We actually see gold actually kind of plummeting right now. So this is what I'm actually going to tell you. So when not even it's not even a secret. So what actually happens economically, these two assets, meaning the dollar and the gold, what normally happens most of the time is if the dollar is actually bullish, the gold tends to actually go down, just like it actually is right now. I did this on the stream. Imagine that, and I actually wanted to actually have a sell, but shit, like I'm more of I think on this currency pair, I think on gold, I think I'm more trying to get to the bullish side of things, because I actually feel like gold could actually reach about 2,500. So I like to see this. Like I love to see this. I'm not gonna lie to you. Like I love to see gold plummeting like this. This is insane. This is insane. I love to see this really. And it didn't respect the trend line, which is alright. It's not even a big deal. Nigga using two mouses. One for Bloomberg and one for fucking trading. Okay, so it broke the fucking trend. It broke the trend line, and it's actually just kind of plummeting like crazy right now. So I think the horizontal line on 2330, I think that was the target for me to actually kind of see gold as kind of cheap and actually buy it. So we actually reached the target early than expected. Not gonna lie, I didn't think that we were gonna reach 2330 by today. Um, but it actually tells you a lot of volatility is actually in the market right now. I mean, a lot of volume is actually in the market, and the market is kind of volatile. So, um, I think another thing we actually that I actually look at when it comes to um, looking at the factors that might actually drive gold prices up or down is I look at gold reserves. So last time I checked the data was I think it was China was leading with the most gold that has actually been bought. So um, I think China was actually the leading. Yeah, I think China and Vietnam. I think at one point was actually leading, but they've been actually acquiring gold like crazy. So they've been making a lot of bag. Like when gold reached 2,450. I think at I think at that point, so many people, I think so many investors actually cashed out on their investment because, I mean, 2,500 is just kind of like I think this pullback though is a really great opportunity to actually take it to 2,500. I'm just saying though, you know what I'm saying is I'm just saying though we're gonna see. I'm not saying it's gonna happen, but it actually looks like it's gonna happen. But when we actually look at factors like the dollar. If the dollar depreciates in value, then we might actually see gold as a more valuable or as a more attractive asset. But yeah, we actually look at China gold reserve. Let's just look at that. Um, so these are all like the data you can actually look at when you actually want to trade. Hold on. When you want to trade commodities, there's some of data that you actually look at. But just like I'm saying, it also depends on the duration of your trade. So if you're more of like a short term, if you're more like a short term trader, you scalp a lot to get it in and out of the market, then then you might actually say, okay, cool. I really don't have to look at much data or the news or watch the news at all, because what I actually follow is the market movements. So if you have balls enough, so back to the chart, we actually see the gold. I mean, we actually see that China is acquiring gold like crazy, all time high. So this is actually good. I think I saw the same thing with the U.S. as well. A Federal Reserve. Um, I saw the same thing as well with the gold reserve, and it was actually just like kind of going crazy. So this is what I actually hold on, where is it? Right here, right here. So yeah, 23.12 billion of gold has been held by the Federal Reserve. That's a lot. That's a lot of gold. Right, it's a lot of gold. And Vietnam as well, I think, was one of the leading ones with the gold reserve. I don't know if they have the data on this one though, because it's just such a small country. But you get the picture though. You get the picture. Just look at alternative. Look at alternative data to actually kind of form your trading strategies, kind of actually kind of form your trading plan. to have like because you can't just get into a market, you can't just get into a trade simply because you just like kind of drew her like trend lines and you think, okay, cool, I might actually buy. You can actually do that. You can actually make money doing that. I'm not saying you cannot do that. You can actually make money doing that. But the thing is, when it actually comes to trading, the most important thing when it comes to trading is if the skill or if the strategy you're actually using. Let's just say strategy. I don't like to use that word, but let's just say if what you're actually doing is scalable and consistent in a period of a year, and if you actually are able to consistently produce profit, then you might be onto something. You know what I'm saying? You might be onto something. Make sure you track your trades and everything like that, so you can actually see. So we have silver again. So on the side we got silver. Silver is going, it's plummeting as well. I mean, it's actually going down as well. So here's the thing about commodities. So we have gold as the most expensive commodity, right? We have gold as the most expensive commodity. We have platinum that follows gold. We have palladium after that, and then we have I don't know, silver is I think, but we have other commodities. And then we have silver, and then we have copper and other commodities. So what I actually like to do though, when I just say I have a small portfolio, and for other people as well, you have small portfolios, is when you actually see an asset that you want to trade, but you feel like, but an asset is actually just kind of expensive or just kind of pricey. So what I normally do is I kind of look at alternative trades. I kind of look at alternative assets, meaning if I see that gold is actually plummeting, I normally trade silver or copper because they're cheap, and they are highly correlated with gold. You know what I'm saying? So you know what I'm saying. So that's that's what I actually do most of the time. Copper is another cheap asset as well. It's about, I think, hold on, dang, I just forgot about this thing. Why did I do this? Okay, yeah, dollar is about $4. It's about $4 per ounce, I think. Is it an ounce? Yes, it's an ounce, I think. So it's $4. So it's actually plummeting as well. It's just kind of, they're so correlated. So how you can actually see this is you can also kind of do a comparison between assets. Um, right here, I'll do a comparison. This is a copper chart, right? I'll put another chart on top of a copper chart to see the difference in. Hold on now. To see the correlation between these two assets, not the difference, but yeah, see that. But this, yeah, to see the correlation between these two assets, or even three assets. But we put gold, we see gold. We can actually put silver too, so we can actually see the silver charts. Still loading right here. Hold on. Okay, we have gold in green. Let's put silver, so we can put silver too. Okay, we got silver too. So what I actually normally look for when it comes to um, this chart is I look at the pattern. I look at how is. Hold on, let me just remove this a bit. I look at how correlated, how similar is the chart's movement to, like, between throughout the whole, like, throughout the whole charts. So if I see that it's not negatively, I don't see any convergence or divergence, meaning I don't see the charts actually going up. I don't see it going up, and I don't see gold going down. You know what I'm saying? So I don't see that. That's normally what I call conversion. So what I actually see though, in fact, is if the chart is actually going up, I also see that other assets are actually going up. So it means that actually it's very correlated. So this is what I actually like to see. So when you're actually doing a breakdown on gold or anything or any assets, do a small, just kind of do a research on this one. But let me just give you some bit of let me just give you some. a bit of a nugget. So what we actually say is, if you doing a research, just make sure that you actually do a macro analysis, like a top down analysis. That way you can actually just like kind of get the whole picture of what's really happening from a big picture, and then you just like kind of compact those, let's just kind of contract, and just like kind of find a really good asset to trade. So yeah, I don't know if I'm making sense, but that's what actually happens. So yeah, thank you guys for joining. I'll see you next time.